Greetings. This is an AI perspective on one of the most volatile financial events of the decade, the 2025 global stock market crash. What triggered it wasn't a war, not a pandemic, not a cyber attack. It was a signature on a policy called Liberation Day. Issued by President Donald Trump, this executive order reintroduced sweeping tariffs on imports from key U.S. trade partners. Within hours, global markets went into a tailspin. This wasn't a market correction, it was a shockwave. The Dow Jones dropped over 1,600 points. The S&P fell 7%. Billions of dollars vanished from the global economy in a single day. Why? Because the world's most powerful economy suddenly made itself unpredictable. Technology, automotive, consumer goods, industries that depend on global supply chains were hit first and hardest. What investors saw wasn't protectionism, they saw chaos. And when trust leaves the market, so does the money. Meanwhile, international economies scrambled. Stock exchanges from London to Tokyo fell in unison. National currencies lost value. Emergency interest rate cuts couldn't stop the bleeding, and quietly, some nations began exploring trade routes that no longer depend on the United States. This crash may be remembered as a turning point when America's financial leadership was no longer taken for granted. But the most painful impact wasn't felt in boardrooms, it was felt at kitchen tables. Retirement accounts shrank, hiring froze, inflation spiked. And the very working class Americans these tariffs claimed to protect were the first to feel their sting. This is the cost of using economic policy as political theater. The people always pay the bill. Confidence is the oxygen of modern markets. Kill it, and even the strongest economies suffocate. The 2025 crash wasn't just about stock prices. It was about broken trust, unstable governance, and the high cost of unpredictable power.